Imagine turning $100 into $1,000 overnight. Sounds amazing, right? Now imagine losing that entire $1,000 the very next day. Welcome to crypto, a market where fortunes are made in hours and destroyed just as quickly. Most traders enter crypto believing success comes from finding the perfect indicator, the perfect strategy, or the perfect coin. But after 30 years of trading experience, I can tell you something most beginners don't want to hear. The biggest obstacle isn't the market. It's you, and that's exactly what legendary trading psychologist Mark Douglas spent his career teaching traders. Today, we're going to explore how his principles can transform you from a crypto gambler into a consistent, professional trader. Let's begin. Most crypto traders don't realize they're gambling. They call it trading, but their behavior tells a different story. They chase pumps. They buy because influencers are excited. They double down after losses. They risk money they can't afford to lose. And they constantly search for certainty in an uncertain market. Mark Douglas explained that the average trader enters the market with a hidden belief, the belief that every trade must be a winner. When that expectation collides with reality, emotions take control. Fear appears, then frustration, then revenge trading, then disaster. The crypto market magnifies this problem. A coin can rise 50% in a day. Another can collapse 70% overnight. These extreme moves create emotional addiction. The trader becomes hooked on excitement instead of focused on consistency. The result? They stop thinking like investors and start thinking like gamblers. One of Mark Douglas's most powerful lessons was simple. Anything can happen. Read that again. Anything can happen. Most traders hate this idea because they crave certainty. They want guarantees, they want confirmation, they want someone to tell them exactly what will happen next. But markets don't work that way. Not stocks, not Forex, and certainly not crypto. A perfect setup can fail. A terrible setup can succeed. The outcome of any individual trade is random. What matters is your edge over a series of trades. Think about a casino. The casino doesn't care whether a player wins one hand of blackjack. It knows its statistical advantage will play out over thousands of hands. Professional traders think the same way. Amateur traders focus on individual outcomes. Professionals focus on probabilities. That's a massive difference. Let's say your trading strategy wins 60% of the time. That sounds great, but here's the catch. You don't know which 60 trades out of 100 will be winners. This is where most traders fail. They experience 3 losses in a row and immediately abandon their system. Then they jump to another strategy, then another, then another. They spend years strategy hopping without ever developing consistency. Mark Douglas taught that consistency comes from trusting your edge, not because it guarantees a win, but because it gives you a probability advantage over time. Imagine flipping a weighted coin that lands on heads 60% of the time. Would you panic after 3 tails? Of course not. You understand the probability. Yet traders panic after 3 losing trades. Why? Because they become emotionally attached to individual outcomes. The professional trader accepts losses as a normal business expense, just as a restaurant expects food costs, just as a company expects operating expenses. Losses are not failures. They're simply part of the process. Fear is responsible for most trading mistakes. Fear causes traders to exit winning trades too early. Fear causes traders to move stop losses. Fear causes traders to hesitate before entering valid setups. Fear causes traders to avoid opportunities after recent losses. The market isn't creating the fear. The fear already exists inside the trader. The market simply exposes it. Mark Douglas believed that fear comes from believing that your self-worth is connected to trading outcomes. When a trader loses money, they don't just feel financial pain, they feel personal pain. Their ego gets involved. But professionals separate themselves from individual trades. A losing trade doesn't make them a bad trader. A winning trade doesn't make them a genius. Each trade is simply one event in a long series of events. This mindset creates emotional stability, and emotional stability creates consistency. So how do you transition from gambler to professional? First, define your edge. Know exactly why you're entering a trade. Second, determine your risk before entering. Never let the market decide your risk for you. Third, accept the possibility of loss before clicking buy or sell. If you're uncomfortable with the potential loss, reduce your position size. Fourth, focus on execution rather than outcome. Judge yourself based on whether you followed your rules, not whether you made money. And finally, keep a trading journal. The market gives feedback every day. The question is whether you're learning from it. Professionals treat trading like a business. Gamblers treat trading like entertainment. The difference shows up in their results. The crypto market will always be volatile. There will always be hype. There will always be fear. There will always be opportunities, and there will always be traders who blow up their accounts chasing quick riches. But there will also be a small group of traders who consistently extract profits year after year. Not because they predict the future, not because they possess secret indicators, and not because they're smarter than everyone else. They succeed because they've mastered themselves. Mark Douglas understood that trading success begins in the mind. The moment you stop trying to predict every move, the moment you start thinking in probabilities, the moment you accept uncertainty, you stop behaving like a gambler, and you start thinking like a professional. In crypto, that mindset may be your greatest edge, because while everyone else is fighting the market, you'll finally be working with it. If you found value in this video, remember to like, subscribe, and share it with another trader who needs to hear this message. Trade smart, stay disciplined, and remember, consistency is not built by winning every trade. It's built by executing your edge over and over again. See you in the next video.